We are now live. So, hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I'll be your money show host for this session. I do have Jake here with me in the Zoom room. We are ready to begin his presentation on time at 3:20 p.m. Eastern Time. Thank you all so much for your patience, and I hope you have enjoyed the show thus far.
I certainly have.
Have you been tuning in today, Jake?
Yes, I have.
Oh,
Thank
fantastic. That's great to hear.
Very organized, excellent show.
Well, it's about to get even better once this session kicks off. And to those of you just joining us, that will be in about 5 minutes now. Thank you all so much for your patience. Welcome in to those of you just joining. This is your 2 minute warning. We will be getting started with Jake Bernstein's presentation on time at 3:20 p.m. Eastern Time in just a couple of minutes now. Hello, everyone, and welcome to the session. It is my pleasure to introduce Jake Bernstein, internationally recognized futures analyst, trader, and author. Jake has written 45 books, numerous research studies, and newsletters on futures trading, stock trading, trader psychology, and economic forecasting. He also publishes the now digital Jake Bernstein Online Weekly Capital Markets Report and Analysis. Now, with that said, Jake, I know you have a lot of information to share with us today, so I will hand the mic on over to you. I'll be right here if you need me, but the floor is all yours.
My goodness, Charlotte, thank you for that wonderful introduction. I appreciate it. And I hope no one has any trouble hearing me. My voice is not what it used to be. So thank you very much. I will not be taking questions during this session, excuse me, but you can write me at my email address right over here, rulesbasedtrader@gmail.com, and I'll be glad to answer you. So doing the money show brings back a lot of memories because I've done the money show for 20 years now, maybe more than that. Most of them actual live appearances, and then a number of virtual appearances like today. The memories are bittersweet because I think about all the people who attended and wonder if they really learned anything or if they went on to be like most traders, which was to lose money. So I want to talk about that without intending to offend anybody. The fact of the matter is that the small trader, by which I mean the trader who starts with a relatively small amount of money in their account, is usually wrong on their turns in the market. Usually they make the wrong selections, they trade the wrong stocks at the wrong times, and they have the wrong decisions to make at the wrong times. Let's explore that a little bit and talk about why it's happening. And if it's true, is it true that the small trader is always wrong? The answer to that, and I'll tell you that up front, is no, it's not true. But the most important thing is this. We want to know when the small trader is going to be wrong so that we can do the opposite. It's really very simple. There's no secret to that, but we need a way to measure small trader sentiment. How do we know that the small trader is wrong? The small trader is usually wrong when many small traders agree on something happening at a certain time. I'll show you specifically in quantifiable terms what that means, because I'm a numbers trader. Everything I do is by the numbers. If you can't give me the numbers, I'm not going to do it. If it's not by the numbers, then it's a guess. It's an opinion, and I have no use for opinions or guesses. So let's begin. Let's go to the disclaimer, which basically says, yes, you can lose money trading. And let's hope we keep that losing money in trading to a very small amount and very infrequently. So there's a disclaimer. So let's begin. What causes traders to lose money at major turning points? Panic, fear, and greed. Or as Bertrand Russell said, dread of disaster makes people act in the very way that increases the disaster. So if you're afraid that something's going to happen, you panic, and that panic feeds on itself and creates more panic. You're all familiar with that. So today I have good news, bad news, and true news for you. The good news is the small trader is not always wrong. The bad news is the small trader is usually wrong at major turning points, which we will explore visually and mathematically today. And the true news is you can use that information to make money, but you need to use it in the right way, and you need to gather your information at the right time. For many years, analysts have been trying to determine how do we find out what the small trader is thinking collectively? What's their collective conscious say? Well, we have a way of measuring that, and since 1982, at my office, we've been taking a survey specifically determined to find out what the small trader sentiment is as a group. In other words, we find that when 80% of small traders agree that something's going to happen, is a leading indication that it won't happen, or in fact, that the opposite will happen. I will show you graphic representation of that so that you can figure out exactly how to use this valuable indicator. And here is part of that graphic. This is a chart of S&P futures daily going back to 2020. On the top of the screen, we have the price, open, high, low, close. At the bottom of the screen, we have the results of my survey. So what does that mean? The upper line is 80% bullish, or actually it's almost 90% bullish. The bottom of the screen it's about 12, 15% bearish. So what do we find? Let's go right over here. At this point, the small trader is very bullish. Over 90% or approximately 90% of the people that we spoke with that day, they were convinced that prices were going higher. And in fact, they were right for a while. In other words, small trader sentiment being very bullish is a leading indicator. It turns before the market does. Let's look at the opposite situation right over here. So the small trader was wrong, and then prices collapsed. And all the while during the collapse, small trader sentiment, represented by the blue line percent, was declining, but not to panic levels. But then over here, in this area that's encompassed by the oval, the small trader was not only bearish, but they were entrenched bearish for a long time, meaning that less than 15% of all the trade. Oh, let's go back. Sorry about that. Less than 15% were convinced that prices were going higher. And what happened? They picked the bottom to the almost to the very day, right over here, and prices started to go up. So we can see that, at least at this graphic example, that small traders have been very wrong at turning points. It's not that they were wrong all the time. And that's a very important distinction to remember. The small trader is not always wrong. The small trader is wrong at critical times, which is even better for us because most of the time we can ignore what the small trader is thinking or doing unless we have specific indicators that correlate with and trigger small trader sentiment. We will talk about that shortly. And so, what can we do with this information? Well, if you're interested in trading major turns in the markets, this information is for you, which explains why the vast majority of subscribers to this data, which I publish every day and have since 1982, the vast majority are hedge funds and professional traders. The small trader is not interested in this information. Why? Because they don't like to know that they are going to be wrong. They don't like to be part of the mass hysteria. But let's examine that in more detail. What other factors go into the small trader being wrong? If you go to the internet and you do a search, by the way, some very important books have been written on this subject. The Crowd by Gustave Le Bon and other books about this. Let's skip my credentials for a moment. Let's go back to this. If you go to the internet and you do a search, learn how to trade stocks was the search term we used. What happens? You get millions of hits on the search. In fact, to be specific, you get about 834 million hits. Now think about that. You're a new trader. You think that everything is on the internet. And further, you think that everything on the internet must somehow be true or it wouldn't be there. You get 834 million hits and you say to yourself, now what the hell do I do? Who knows if this information is any good? Who knows if it's bad? Who knows if it works? What are the numbers? And you find that if you ask for the numbers, in other words, performance, how often has this particular strategy been right? How often has it made money? How many consecutive losses has it taken? How many consecutive profits? What are the statistics? If you don't know the statistics, you're going to lose money. And unfortunately, finding out the statistics is such a daunting task that most traders give up right there and say, I will believe what this person is telling me who's marketing this strategy and see if it works for me. By then, they've already processed your credit card and they have you on automatic renewal. Don't do that. It's not going to work. In order to be a good trader, you need to know the numbers. If you don't know the numbers, you're toast, and you will join many of the other small traders who lose their money. What do I mean by the numbers? Let me give you an example. And go back a few slides here. So just bear with me. As an example, if I make a chart which represents the S&P composite average every year from 1984 to 2026, this is what I get. What do I mean by that? I take every year of the S&P and I convert the numbers. I change the highest price of the year to 100. I change the lowest price to 0. It's called detrending or normalizing the data. So that no one year will look exactly like this, but most of them will. Does that mean it's always going to happen? No, there is no always in trading, but it does mean it's a number. For example, if I go here to the first 3 weeks of July, I see 3 arrows up with plus signs. What does that mean? It means that 60% of the time, 60% of the time, 69% of the time, the price of S&P for this week will be higher than it was the week before. That's a number. It's a statistic. I can use that statistic to, number one, make money. Number two, avoid losing money. And number three, to add to positions if I'm already long. But this is only one step in the process. It's a setup. It says this is what normally happens. I have to be able to discern if normally is going to be again this year. I can do that with other methods, such as my setup, trigger, and follow-through strategy, which most of you may be familiar with by now. If not, it's all over the internet. Just look up Jake Bernstein, setup, trigger, follow-through. Every trade is divided into 3 parts. Number one, the setup, which is a pattern. That's what this is. Trigger, which is called timing, and follow-through, which consists of 2 parts. Where are you going to be right, and where are you going to be wrong? As an example, let's go to this right over here. October, first week. Look at the bottom of the screen. You see a majority of arrows in the up direction. What does it mean? It means that in most cases, the stock market, based on the S&P, has been higher during this period of time. In fact, approximately 1/2 of all the movement for the entire year occurs during the last 2.5 months of the year. So what do I know? During this period of time, I want to be long stocks, but I don't want to be long unless there's a trigger, which is timing. As an example, let me go back one slide here. As an example, we can take this data and further reduce it and ask the question, give me the exact date to go long and the exact date to get out and show me what happened. It's all numbers. The good news is that it is all numbers. The bad news is that most people can't deal with the numbers. You need to be able to know what the numbers mean. And unless you do that and spend a little time and a little bit of elbow grease finding out what the numbers mean, it's never going to work for you. And I say that to you honestly because I have nothing to gain. Oh, by the way, I've got really good news for you today. I have nothing to sell you. You don't need to buy anything from me. You don't need to put your credit card through anything. You don't have to scan your card. You don't have to go to the code. Nothing. What I have for you is honest to goodness education. And I hope, to all hopes, that you appreciate what I'm showing you. Because it took me 15 years, that's 5 years, to learn what I'm teaching you today. And given the fact that I've been trading for almost 60 years, that's 60 years, that 15 years made a big difference, and I hope to share it with you. In fact, I hope you use it immediately. Set up, trigger, follow through. Be a numbers person. Don't be afraid to ask questions. Now let's go further. I'll show you something else. Let's go to the next slides. Go. Let's say that I was a very short-term trader. What do I know? And again, as a trader, it's always good to know what you want to do before you want to do it. This is one way of knowing that. You ask the question, what is a seasonal trend? When do we get in? When do we get out? And unless the numbers and the data are specific to that information, you're going to lose money, if not in the short run, and certainly in the long run. So listen carefully. Here's a 2-week period where you want to be bullish, another 2 weeks, and this long period right over here. And we can fine tune that. How can we do that? By doing a search. And here's the best news of all. If you know how to use artificial intelligence, you can actually go to your AI and ask the question, what would be the good date historically to buy S&P futures the first week of November and when to get out? And it will come back to you with specific information, clear to the very moment that you're supposed to get in. which is the close of trading, and it would look sort of like this. In fact, let me stop my share and switch screens. I'm going to show you something else, so just bear with me, folks. And remember, this information is costing you nothing, but it will be worth a lot more if you use it and take the challenge. See it yourself. I'm going to log into a site here. I'm going to ask a question. I'm going to go to S&P, seasonal trades, stock trades, like so. I'm going to go to a database for the S&P. I want you to appreciate that I'm showing you historical information, which is very valuable. You may not want to believe it, but it is true. And when you see how many years of data it's based on, you'll appreciate the fact that it's not just short-term stuff. And by the way, speaking of short-term, even though I wrote 5 of the best-selling books on day trading for McGraw-Hill and Wiley & Sons, I am not primarily a day trader. I think those days are over. Let's look at the S&P.
Hey, Jake, I don't want to interrupt you. I'm so sorry, but I don't think that the new screen share has been brought up.
Really, thank you so much.
Yes, of course.
Let me see what I can do here. Right, that's right. Okay, thank you so much. Yep, momentarily.
Perfect.
Okay,
Seeing
good.
it now.
Thank you so much, Charlotte. I appreciate that. Okay, so let's do this. We're doing a search on S&P. So I went to S&P right over here and clicked it. I'm going to ask the computer a question. The question is based on vast, huge amount of history. In the month of July, have there been any opportunities consistent with what I showed you on the chart? In other words, probability of success. So I'm going to ask a question. The question is there anything historically that can be done in S&P that will return 75% accuracy? And since I always trade with stops, I'm going to put a stop loss in as well. So just bear with me for a moment, folks. I'm going to say I never want to risk more than 5% of my account in this trade. And I want this to be a short-term trade. So let's talk about days in trade. Less than 25 days. So please consider what I've done here. I've asked the computer a question. The question is, look through your vast historical database. One moment, please. Okay, computer, please cooperate with me. Okay, let's do it a different way. Okay, it's not happy, no problem. I'm just gonna ask it for everything. So computer, give me every trade in S&P 100 beginning in July with at least 20 days duration. Do a search. Computer says there's nothing that meets my criteria. Well, for some reason, it's not working correctly, but let's try it one more time. Thank you for your patience with me. Let's try it again. Let's go back to the S&P. Thanks for your patience. You will get there, just bear with me. Let's try the S&P 500. These folks, I can still show you what I need to show you. Let's try it. And let's do it this way again. All right, I think I think we've gotten somewhere. Okay. No. Let's try one more time. Let's try it this way. Always good to see a professional fail. And let's try this. No, let's come back to this later. The point being this, I'm going to go back to the previous share and reinstate it. We'll try it a different way. So what I'm saying is this. The computer has the capability of giving me everything I need, specifically in terms of entry and exit, entry date, exit date, profit, loss, everything I need. And so I have numbers. If I don't have numbers, I don't have anything. Sooner or later, not having numbers will catch up with you and cause you to lose money, and you become the dreaded small trader who is incorrect most of the time. So how can you finish this off and do it the right way? Easy. By having the numbers and getting the numbers, because the ability to get the numbers is out there. All you have to do is apply yourself. Let me make sure I've shared the right screen. Here we go. Let's go forward a bit. So these are some of the books that I've written on day trading, in case you're interested. And by the way, what's really fascinating to me is this. Most of the small traders who come into the market, almost every day, are only interested in day trading. Unfortunately, there's a problem with that. The problem is this. As a day trader, you must be out by the end of the day. If you're out by the end of the day and you make a small amount of money, what's going to happen when you lose money? We know for a fact that most traders lose more money than they make on an average trade. Therefore, you may make $200 or $300, give it all back plus more the next day, unless you can maximize your profit. How do you maximize your profit? With larger positions. Most small traders don't have the money to risk for larger positions. They don't have the money to establish larger positions because they don't have the margin, and therefore they're unable to have a profit maximizing strategy, which is one of the biggest reasons why small traders want to be day traders but don't understand the mechanics of the process. By failing to understand the mechanics of the process, they lose money most of the time. So even though I've written these 5 day trading books plus more, I am not a day trader, although some of my trades end up as day trades. I am not primarily a day trader. So let's go forward. So let's look at this. Here's another chart. Here's a chart of the NASDAQ. I want you to look at it very carefully. Notice right over here on the left, small trader sentiment reaches that high level, 80% or higher, which is our cutoff level. So just to be clear, we use 2 levels, 80% and 20%. At 80%, it's a warning that we're going to top. Look what happens the next few days. Then we turn higher again, over 80%. We wait. It's a leading indicator. And this was the largest number we had about 2 weeks before the big decline that has continued for a long time. And then finally, after many, many days, the small trader reaches a panic point, a liquidation point, and the sentiment drops down to about 10% bullish. And look what happens then. This right here, to the very day. But then what happens after that, and this you'll find it really fascinating, because I always do as well. This is where the previous chart left off, right over here. The exact bottom, after many, many days, and after picking the exact top. So what about these little ones right over here? Are these significant? Are these significant? Or is this the most important one? The answer is very simple. Remember what I said. Setup, trigger, follow through. the fact that we have a very low number on sentiment or a very high number on sentiment is meaningless in and of itself. What's important is the timing trigger that goes with it. That's the most important thing. So let's look at a few more examples. And again, there's so much to be said about this topic, I can't cover it all and give it all justice in a relatively short period of time. Put these on here for you. So let's talk about this. There are three major participants in the markets: futures, commercial traders, speculators, and small traders. Let's talk about each category and determine how we're going to use that information to our advantage. Most traders have no idea that this report exists. It's called the Commitment of Traders Report. The Commitment of Traders Report divides traders into three basic categories: large traders, speculators, small traders, and commercial traders. Who are these groups and why do you want to know what they're doing? I'll tell you why. And this is super important. Number one, small traders. These traders account for about 5 to 10% of all trading activity, and they usually have small accounts, less than $5,000, and only trade one or two contracts a day at the most. Speculators, these are large speculators. They move larger positions and usually trade with moving averages, and by the time we find out what their positions are, it's too late. They've already changed their positions. In other words, this report, the Commitment of Traders Report, comes out once a week, issued by the US government. So this is actual true data. In this report, they divide the three groups and tell you what percentage of contracts are owned long and short by commercial traders, what percentage of contracts are owned long and short by speculators, and what percentage of contracts are owned long and short by small traders. I'm not interested in speculators. They change their positions. By the time the report is out, it's too late. Small traders, we have the Daily Sentiment Index, which is an up-to-date data. It comes out every day. This Commitment of Traders Report only comes out once a week. And commercial traders. Let's talk about commercial traders because that's super important. Commercial traders are the exact opposite of the small trader. The small trader has no interest in a commodity or the stock. They have no interest in hedging. They have no interest in taking delivery. They're just in there for a small short-term trade. Commercial traders account for 90% of market activity. They're the ones who run the market. They determine the size of the position. They determine where markets are going by their positioning in the markets. Let me show you what I mean. Let's take a look. This is a report, the Daily Sentiment Index. In other words, this report comes out from my office every day, and it shows the percentage of bullish or bearish on that day. Example, and this is an old report. On May 22nd, 2020, here are the percentages for the various markets. Notice this number right over here, natural gas at 15%. If we go to the natural gas futures chart, we will see that most likely over the next several days to weeks, the market made a low and started moving higher. And similarly for corn at 18%, or in an opposite position. Hold on a second. Come back. The opposite position, gold and silver at 84% and 88% respectively. You can expect that over the next few weeks, these two markets made a top. Very, very simple, very elegant, and it's a number. So remember what I said. You must trade by the numbers. But now, let me show you something even more interesting. Let's go to, and do you remember this chart? Yes. Let's go to this. Check this chart out. This is a chart of the mini-size Dow futures. I want you to look at this red stuff over here. All of this red stuff over here is hedging activity by commercials. In other words, you run a mutual fund, you take money in, you buy the futures, you go short. You buy the futures, you go short to hedge your position. So all of this is not short positions, it's hedged. But look what happened over here. Back in April of 2020, commercials started being net buyers. In other words, not only were they buying futures for their clients, but they were buying futures in their accounts as well. What happened after that? Let me show you. Here we go. So what happened after that? The market continued to go higher, and you notice that for the entire duration of this move, commercials were hedged, in other words, short the market, and here they started buying the market went up. This is probably one of the most important things that I can tell you in terms of market moves. In terms of market moves in big size, commercials will buy positions long before the market begins to go higher. Let me show you some more examples. Here's another one showing the difference. This is very interesting. Small traders are short, commercials are long. Small traders are long all the way down, and the large trader is hedged all the way down. The exact opposite situation, illustrating clearly the fact that the opposite position from the long position that small traders have is usually a short position by large traders. Let me show you some other graphic examples. In other words, what I'm showing you here is the clarity, the specificity of what I call trading by the numbers. First, let's look at the bottom of this chart. It doesn't matter what this chart is, but let's take a look. On the top of the screen, we have the price. On the bottom of the screen, we have small trader sentiment. Look at what happens. Let's look at this bottom right over here. Small trader was negative right here prior to this huge move up in futures. And then, almost exactly at the very top, small trader was 90%, 80% bullish. Then the market dropped. Small trader became very negative. Oh, one moment, please, let me go back. Small trader became very negative, and the market bottomed. We're here. Look at the correlation. It's absolutely uncanny. Small trader, 80% bullish. Top of the market, leading indicator. Small trader bullish a number of times over here. Market finally turns lower. And right here at the very bottom, small trader is negative again. And look at the correlation as a leading indicator. So please pay attention to this. In terms of importance, I would say the Commitment of Traders report, breaking down commercials, small traders and large traders, is one of the largest reports and most important reports you can ever use if you're an investor or a short-term trader or an intermediate-term trader. As a day trader, it won't help you. Let's go to the next slide. And Charlotte, can you tell me when I'm running out of time? Okay, let's look at the silver. Check this
You're
out.
good on time for that.
Okay, about how many minutes do I have left?
So you've got about 25, 26 minutes left.
Thank you very much. Appreciate that. So look at this silver chart. Imagine all this while that silver prices are going sideways to a little higher. The small trader is not too bullish. Then, all of a sudden, one day before the top, the market sentiment goes to 80% or higher, and it's the exact top of the move. So, how does that happen? How does the small trader know in advance they're going to be wrong? I have no idea. And I assure you, these are not manufactured numbers. They are real numbers collected on the actual day. Then what happens? Prices collapse. And look at this right over here. The market bottoms in front of a huge move and goes higher and higher and higher until finally you reach a peak on the sentiment, which was likely followed by a decline in the market. Most interesting. And that's what I mean when I say trade by the numbers. Let me back up just a little bit in case I'm going too fast, because I do have a tendency to talk too fast. Think about this. Within the context of what I said earlier, setup, trigger, and follow through. What is the sentiment? A leading indicator, a lagging indicator, a time current indicator is a leading indicator. It says, watch out, we're getting close to a top. Watch out, we are getting close to a bottom or at the bottom. Let's figure out how to use that. So let's go back to the charts. One moment, please. Let's look at another chart. Gold. And again, think about this as a leading indicator, not as a current indicator, such as a moving average or otherwise. So look, compare. Sentiment reaches a number of low levels here, 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 and here, and that forms a base. In other words, the market is setting up for a move up. Then the market makes its move. Before it continues higher, it gives us a high number. We get a reaction down. Similarly here, we get a big reaction down. Similarly here and here, we get a big reaction down. And then finally, the last number on the chart is again a high number. So what would we expect? We would expect that in every case where the sentiment was either too high or too low, by which I mean by definition, 80% or higher, 20% or lower, you need a trigger. And what is that mysterious trigger? It could be anything. It could be a divergence. It could be an intraday moving average channel sell. It could be a number of things. Or it could simply mean you're long the market, you're not going to add to your position, or you're going to get out, go flat, and wait for the next opportunity. So what it means depends on what your timing is and how you use it. But at least it gives you a number and it says, be careful. Something is going to happen and it's not going to be positive or it's not going to be negative. And in a moment, I'm going to show you some live charts and show you where they stand right now. But let's go further. Do a couple of more things. I'm going to skip some slides, but I want to show you something else. Commercial activity. And it doesn't matter what the market is. I want you to see this. I've taken every green spot, which indicates commercials are long. And by the way, before we continue, who is this mysterious commercial? In the silver market, the commercial would be the mining company, the processing company, the jewelry company, the manufacturer that uses silver, the mining company, and so forth. In soybeans, who would be the commercial? The farmer, the producer, the processor, the end user, they would all be commercials. So I want you to notice this. Each brown green spot on the chart shows net long activity by commercials. In other words, they're buying the product. I want you to see how I put these arrows on here. Commercials are buying, market goes up. Commercials buying, market goes up. In other words, commercials are a leading indicator of moves to the upside, just like small traders' sentiment is a leading indicator of moves to the downside when combined with timing. So look at this move right over here. A record-breaking move in the price of this commodity, and I've taken the name of the market off so that you're not biased. Look what commercials were doing before this move happened. Look what commercials were doing before this move started, and this move over here. So it's important to know what commercial activity is doing if you're an investor. If you're not an investor, the commercial activity won't help you much. Right now, for example, if you're a futures trader, sugar, cocoa, coffee, interest rate futures in some cases, some of the currency markets, cotton, are all showing very large accumulation by professional commercial traders, indicating what? Indicating they need the product and that they expect the market to go up. They won't always be right, but I give them a 90% accuracy if you use it the right way. Let's go forward. Let's look at another one. How about this one? Again, I don't trade orange juice futures. I know very few people who do, but look at the comparison. Commercials are buying right over here. Market goes up. They're buying right over here. Expect the market to go up. They're buying here and here. In both cases, the market goes up. And compare that to small trader sentiment. Small trader was very negative over here at the bottom, exact opposite situation of commercials. Let's go to the next one. You already looked at this one before. Let's look at this one. Imagine this. Kiwi dollar. New Zealand Kiwi futures with sentiment. Look at this situation. The exact day of the top. the exact day, 1 day late after the bottom. Can you imagine that? So Kiwi, small traders on Kiwi were very negative here, very positive here, right at the top. Very negative here, right at the bottom. Astounding. And this never ceases to amaze me because if you use this with timing, it's a free ticket to great profitability. Let's see if we have another that I can share you. Gold. Look at it. 1, 2, 3, 4 indications that the small trade was very negative. Given that the small trade was given that the small trade was very negative, look what happened. Then, right over here at the top of this move, small trader is finally bullish. They didn't get bearish enough over here to take any action, but again, you can see the relationship I'm talking about. Let me go to another one. Silver. Check this one out again. Here and here. Let's look at another one. You like soybeans? Check it out. 1, 2, 3, 4, 5, 6 bottoms in soybeans. Every one of them preceded or accompanied by a very low reading on small trader sentiment. 1, 2, 3 tops, each one of them preceded by small trader sentiment as on the bullish side. So think about that. And remember, the most important thing I can tell you about this is it is not a made-up number. It's an actual number. It doesn't occur after the fact. It's from the very day of the survey. Think about that. Let's go to the next one. Now you can see why it's a favorite indicator of hedge fund traders. How about this one? Aussie dollar. The lowest sentiment, 1 day below 1 day ahead of the bottom. Most fascinating. And here, we don't know what happened, but it started to go sideways. How about another one? European currency. Small trader sentiment bottoms right over here. 4 days before the low and tops 1 day after the high. How good is that? How about this one? US dollar index, basically the same situation. Look at the correlation. Look at the fact that small trader sentiment is the leading indicator, or at the very worst, a time current indicator. In other words, it tops and bottoms at the same time as price. How about Mexican peso? Right over here, you're waiting and waiting. Here you get a trigger, and here's the bottom right over here, as well as the bottom right over here. As you can see, not perfect, but very reliable and very useful. What about coffee? You trade coffee or you drink coffee? Here's the top, and here's the bottom, all based on sentiment. And remember, most indicators that traders use are moving averages, RSI, stochastic, ADX, and so forth. This small trader sentiment has nothing to do with any of that. It is the trader's perception, expectation. It's a psychological indicator. So the trader examines the chart, examines the data, puts it through their mind, their machine, alters it to their perception, and then reports the number to me. I'm bullish, I'm bearish, and then we take the survey. Very interesting. Let's go to the next slide. How about this one? Even a market like lumber, if you trade it, gives very specific indications. And remember, we're combining this with timing. How about on a weekly basis? Interesting enough, the two lowest numbers on the chart, this one right over here and this one right over here, all preceded significant rallies or declines after the top sentiment has been made. I find this to be a very valuable indicator, as do many of the traders who subscribe to the service, because they are hedge fund traders and interested in big moves. Let's go to the next slide. How about S&P? I go all the way back to 2020. You can see these moves very simply. It's not perfect, but very reliable. And let me see what else I have for you. How about this? The second biggest up move in gold on the entire chart, right over here, right? Is it actually the biggest up move? Right over here, over the shortest period of time. Now, let me see what else I can do for you. Just bear with me for a moment. Going back, and by the way, the daily sentiment index has consistency all the way back to the 1980s when it first started the service. So look, and at an old chart from 2006, sentiment, price. Sentiment precedes a high in price. Sentiment precedes a high in price. Sentiment precedes a low in price right over here. Right over here. Let's see what else I have for you. One moment, please. Just bear with me. If you need to reach me, actually, let's go to the first slide. This email address is the best one for me. rulesbasedtrader@gmail.com. Let's go and do one more thing. So just bear with me. I'm going to switch screens and show you something else. Bear with me. We're going to look at some current numbers on the S&P, on the sentiment. So just hang on, please. Just hang in there, please. I just have to find the right screen to share with you. Okay. Show you some charts of the current situation in a number of markets. So just hang in there. Okay, so just hang in there, almost ready. Just bear with me. We're coming right up to it. Okay, here we go. You should be seeing a daily chart of S&P. Current chart. Look what happened. The lowest number on this chart, right over here, correlates to the exact day of the bottom that preceded this entire big move to the upside. Fascinating. This little one right over here preceded a correction down. Let me mark it for you. And this one here preceded another move down right over here. As you can see, it's not perfect. And remember, it's a leading indicator. It's not a lagging indicator. Check this one out, of course. How about the Qs? Here's the Qs with the sentiment. Check it out. Here's the bottom right over here. And here's the one right over here. Again, it precedes a correction down. And this one here, it's not perfect, but it does precede important moves to the downside and the upside. Let's look at another one. How about gold? Here's the gold. Check it out. This big top right over here. Sentiment is the highest on the entire chart. And this bottom right over here. Just one day before the bottom. And how about now? This is what's happening right now. So what can we expect? So here's the key, here's the deal. Sentiment has dropped to a low level, the lowest level in quite a few weeks. Therefore, step number 2, trigger. We need a timing indicator to get us long the market. Everything else is in place right now. And what about crude oil? What would you expect in crude oil? Check this out, folks. Again, I apologize for the poor quality of the voice. Pay attention to the quality of information, not the quality of the voice. Check it out. Here we go. On a number of occasions, the crude oil market has given high sentiment, and every one of those cases, it was preceding a top. And where are we right now? This is the current chart as of yesterday's close. Here we go. So what can we expect? So I predict for you, don't be a buyer right now unless you have a buy trigger on your favorite timing indicator. But this is not a time to be short. This is a time to be long. Let's see if I can find another one for you. How about US dollar index? Easy trade that. Okay, here we go. Let's look at the chart. And of course, let's not forget about Bitcoin. Oh, and check this out, folks. Here we go. Preceding the top. Preceding a top. Preceding a significant top. Of course, everyone's going to want to know about what about Bitcoin? Here you go. Drum roll. Here you go. Bitcoin. Wow, what a chart. Daily chart of Bitcoin showing the lowest sentiment in many, many days right over here. And preceding what should be a rally in Bitcoin, like so. There it is, right there. Again, second low right over here. So I predict for you that sometime in the next few days, if not sooner than the next few days, shorter term rather than longer term, we will get an intraday buy trigger on Bitcoin to go long, and we'll see how that turns out. I think there was one more I wanted to show you before we call it a day. You won't have to put up with my voice anymore. Hold on a second. All right. Soybeans. A moment, please. Here's the soybeans. In case you're interested. Look at that. Isn't that amazing? Check that out, folks. Check that out. So when I talk about trading by the numbers, this is what I'm talking about. And what do those numbers say now? They say that we have likely bottomed the beans and will likely move higher. But remember, it's all about setup, trigger, and follow through. So that brings to a conclusion what I had to tell you. Remember, let me change screens and wrap this up for you. Just a moment, please. I'm going to stop the share. Yeah. Yeah, man. I refuse to be more to contact me in case you need to reach me. I have nothing to sell you. You don't have to pay me anything. Just send me your questions. I'll be glad to answer them. Here we go. And reach me rulesbasedtrader@gmail.com. Best phone, best way to reach me. So Charlotte, thank you for the opportunity. I'm sorry to put you through my voice, all of you, but I'll do better for you next time because after all, I am an old man and I have earned the privilege of having a bad voice. Thank you again, everyone. Have a great day and a great trading week.
Thank you, Jake, for a fantastic presentation. Now, I just want to let you know that we have some comments in the chat just saying that you are the best, that you are time tested, someone who can be trusted, and that they can always trust you to give great information. So I hope that you take that to heart and know that even though your voice may be failing you, your mind is fantastic and everyone here appreciates your insights so much.
Very kind, everybody. I really appreciate it. And if I can help, I'm glad to do that. Thank you so much.
Absolutely. It's been such a pleasure to have you on today, as always. Thank you so much for brilliant presentation. And I can see our audience members are saying thank you as well. And to those of you who tuned in, thank you, of course, for joining us. It's always wonderful to have you here. We do still have another session in store for you after this. Please be sure to tune in to our stock picking panel to close up this virtual event. I hope to see you all there. And with that said, everyone, have a wonderful rest of your day. Take care.
Cheers. Thank you so much.